Welcome to the Purposeful Wealth podcast. I'm Jonathan Gibson, Managing Director of Wells Gibson. In each episode, we explore how to live a life that's fulfilled, meaningful, and marked by clarity, contentment, and certainty. And today we're tackling a headline-grabbing topic, cryptocurrency. Crypto is back in the spotlight, as you might have seen. Bitcoin's price is up. Spot Bitcoin exchange traded funds were approved in the US, and once again, the hype is growing. There is no doubt that technological innovations in the crypto space are exciting. But despite the noise, our message remains clear. For most investors, there really is no need to alter your portfolio to gain exposure to this volatile and speculative market. Each investment in a portfolio should serve a purpose. Equities or shares are there for growth, and bonds are there for stability. But crypto, its role remains unclear. Bitcoin doesn't produce income, it doesn't pay dividends. So although Bitcoin might be regarded as a digital commodity, it's difficult to see where or if there's an expected return. And while it has risen sharply in price, that rise might be driven more by speculation than by any real economic value. The volatility alone makes it unsuitable as a reliable store of value. Yet some will say Bitcoin has a long enough track record now. But let's keep perspective. Bitcoin began in 2009. It wasn't added to the Oxford Dictionary until 2014, whereas, in contrast, global equities and bonds offer over 100 years of return history. Past returns from Bitcoin might look impressive, but they don't guarantee future performance. Rear view mirror investing is never really a sound strategy, in our opinion. Still worried you're missing out? Well, if you own a globally diversified portfolio, you likely already have some indirect exposure. Companies like MicroStrategy and others hold Bitcoin on their balance sheets. So if these companies profit, you benefit as a shareholder without the direct volatility or risk associated with holding crypto yourself. Crypto often appears sophisticated, the language is technical, the concepts can be abstract. It's easy to feel like you're behind the curve, but there's a helpful rule of thumb. If you can't clearly explain the risks of something you're investing in, it probably doesn't belong in your portfolio. Complexity alone isn't a good reason to invest. At Wells Gibson, our portfolios are evidence-based, globally diversified, and they're low cost. We constantly review the entire investment landscape, crypto included, Bitcoin included. If that evidence ever supports a case for Bitcoin in your portfolio, or crypto for that matter, we will revisit it. But right now, no action is required. Thank you for listening to the Purposeful Wealth podcast. If you found this helpful, please share it with someone curious about this subject. And remember, real wealth isn't just about money. It's about securing everything you value. And until the next time, live with clarity, contentment, and certainty.